Good morning, Campbell and Crary, Amvest Capital, New York City. Welcome to the Amvest Capital Inc. live webinar with Gianni Kovacevic, who's going to do something called the Big Copper Talk. We do hope you'll enjoy today's program. We'll also be available in replay mode shortly after this event. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in and we'll get to them in real time. And after the event, we'll be queuing you for feedback on the event, on copper. Love to hear what you think, and it'll get it to Gianni. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resources sector. We also have disclaimers. Among many things, this call is for informational purposes only. We have with us today Gianni Kovacevic, making you presenter. If you turn on your webcam, Gianni delivered the keynote at the CESCO Chile's famed copper dinner and is one of the world's leading experts on copper and electrification. He will showcase all the latest and most up-to-date charts and graphics about copper and energy, including some important intel about what the biggest economies are doing regarding the Green New Deal. And I picked up from a last webinar I did with Gianni a few years ago. We're kind of re-entering or entering a new copper age. So I really like that analogy to the different ages. With that, please send in your questions during the show. But Gianni, you have the floor.
Thank you, Campbell, and probably some friends are viewing in, and hopefully I have some very contemporary graphics and data that you have not seen, and it's really the Green New Deals, more than one. And I've been talking about these themes for quite some time, and there's going to be some forward-looking statements. Copper Bank is the sponsor of today's program, so this should be taken in the context of everything I say today. And we announced last week a financing. We're going to be raising $1 million. And we're going to very strategically look to advance our projects. So we're going to spend a little bit of money to answer some unanswered questions so that we believe we're going to be able to deliver a lot of news this year. And people that are interested in that, they can contact me. It's not investment advice, but it's a live ball in the air, so you can look at it. But Copper Bank has a market cap of 28 million Canadian dollars. So what do you get? Investors always want to know in the beginning, what does it cost? What does the company own? We got 77.6 million shares. We own 2 advanced stage copper projects in very good locations, and they have a significant private property component, which is very beneficial, I think, for drilling and development later down the arc. And we also have an organic royalty opportunity within Copper Bank. So we're looking to unlock value in this portfolio. And I've always told people that we look at this as real estate. You always make your money on the buy. When we started Copper Bank, we wanted to be in places that had a lot of money spent on projects that we would acquire, places that we felt comfortable that our children could work on those projects. That's our risk tolerance. And they had to be projects that we felt in a stronger market, once these projects have been de-risked, that there'd actually be someone that wants to move them forward. So Ben Graham always used to say this, and it's, you buy from pessimists and you sell to optimists. What did we actually pay for these things, and what were they worth? We acquired Copper Creek in the summer of 2018. You can see the arrow. That's our purchase price. More importantly, look at where the shares once upon a time traded when copper was in a higher level. So we bought 3 or 4 cents on the dollar, and when we bought Contact, you can also see that effectively also 3 or 4 cents on the dollar. And if you look now and compare the previous market cap high of these projects, and how much work was put into them, there's the share price performance of Copper Bank over the last 5 years. So at 35 cents a share, market cap's 28 million. But it would take in excess of $120 million to duplicate the work programs that have been completed on the portfolio of projects. So that would be about $1.50 a share in the Copper Bank share structure. And more importantly, if you look at this once upon a time valuation, the market cap high of everything we acquired, we're talking about well in excess of $3 a share. So when I talk about, is it plausible that we could look at a 10 bagger, or what's the value of this portfolio if we get a positive trade winds in copper, a little bit of luck on the drill bit, some optimization. Me and my team are working very hard to move these projects forward, and that's what we're going to talk about. But first, the big copper talk. What's going on in the world of copper, and how does the year 2021, 2022 shape up for investors following this commodity? I've been following energy for over 20 years. I've been on all the shows many times and talking about the various complexities of global energy, which is one of the biggest industries in the world when you look at it in aggregate. When you're talking about the future of energy, so I'm an expert in incumbent energy systems, but what about the future and all these things that renewable energy or the so-called Green New Deal? You know, do they really know what makes this possible? And you know, I've been quoted as saying that there is a bit of an arbitrage in the lack of understanding by people that do not follow these things, and perhaps they're not electrical engineers. And so we believe that knowing the winners and losers of this pivot, irrespective of the Green New Deal, irrespective of the so-called $10 trillion that global governments are going to put towards stimulus programs, particularly towards these electrical energy schemes, you know, so we're looking at following the winners, and we think overwhelmingly that's going to be the enablers of electrification. Dan Jurgen does his CERAWeek, and it's the who's who of the energy world, and they didn't have it this past year because of COVID, but the 2 years before that, the theme was in fact electrification, renewable energy, energy efficiency, all those things. But the word copper doesn't get a line item, and that speaks volumes as to where do these people think all this stuff's going to come from. And this 2014 statement that you know, was well publicized, and of course many of these big oil and gas concerns are getting into, you know, different types of energy, global energy, and we can see that the clout, the market weighting of them in the S&P has fallen to all-time lows. So, you know, Exxon doesn't have to care about energy transition, but the market does. You know, investors do. And so we've seen this. There's been compression, and the way the European super majors are pivoting to the future is a little bit different than the American super majors, and we can see that very clearly with what Royal Dutch Shell has been doing, and BP and what have you. This is a very famous graphic, and it continues to be more exacerbated. The amount of installations in global solar energy, of course, is going parabolic off the screen, meaning more installations, and the costs just keep falling and falling and falling. It is in almost every jurisdiction now the cheapest way to have electrical energy, and then it should be augmented by wind power. Can you still see me there, Campbell?
Yes.
Okay, good. It's going to be augmented by wind power, natural gas, batteries, or a myriad of things, but certainly this is a big growth trajectory. So when we look at where the world's oil reserves are, you know, we're trying to articulate here that, you know, Japan, growing India, China, Germany, Italy, they don't have petroleum reserves. So they are looking at ways to have a 10 or 15-year plan where they can actually allocate these funds and accelerate their pivot into a different type of energy, which is going to be increasingly electrical energy. World's biggest importer of oil now is China, and what are they doing? They're also making this mega pivot. The 14th five-year plan has now come out, and it is heavily weighted towards all kinds of electrical energy, the creation of it, the transfer of it, and most importantly, the utilization. So when oil was $30 a barrel, there are winners and there's losers. Well, obviously, when oil is cheap, you know, some countries, it's to their benefit. And if you look at the demarcation line here, overwhelmingly, most industrial superpowers in the world benefit from lower oil prices. So what's Royal Dutch Shell doing? They've been pretty vocal on some of the acquisitions they've made. They bought British Gas in 2015, some $60 billion, and they've now declared that they will become the world's largest producer of electricity by about the year 2035. And they're doing this because in every forecast, the role that electrification plays in final energy usage is going to go parabolic. Today, it's about 20%. It's grown 2%, electrification globally since 50, 60 years, but it's going to go to about 50%. And just think about the amount of copper it took to get the world to where we are today. 1 billion people still do not have access to daily electrification. That will change, but more importantly, those that already have it, more and more the things that they utilize are going to be using electrical energy. Trillions of dollars. You cannot tabulate how much electrical metal, aluminum and copper, that is going to require to make this possible. So last year at PDAC, my friend Robert Friedland, his title of his keynote was "The Revenge of the Miners," and with this colorful Star Wars type graphic. And it really is going to shape up to be that way as this becomes on the front page of global publications. It is the singular enabler of electrical energy with aluminum. So the two of them are going to play a starring role, and the demand for both of these metals, we're going to talk about copper today, effectively doubles in about the next 15 to 20 years. There are very few bulk commodities that have this kind of demand trajectory. Last week, Royal Dutch Shell announced the acquisition of Ubitricity. And just think, electrification is abstract. You don't actually see the copper, but just every time you see it, that's what you should be thinking. And what does Ubitricity do? They take urban infrastructure, typically lampposts, and they convert them to be power charging stations. So this is going to be for people that live in big apartment blocks, or they don't have access, or they're not able to just go and plug in. These are going to be installed in the millions around the world. You will charge at home, you will do it at work, you will do it on freeways and supercharger stations, or you will do it in where urban infrastructure already exists. The refit or the retrofit to make this possible is going to be, countless millions of tons of copper are going to go into these initiatives. So we probably understand now. I used to tell, when I used to do a presentation, I used to say, I suggest to you, or in my opinion, or I submit that what might be, no longer. These are facts very hard to disagree with. They are all pivoting towards electric mobility. Yes, it's true that the fleet of vehicles today, of course, is over 1 billion internal combustion engine vehicles, but as they are replaced in the next 10 and 15 years, we should see around the year 2030, about 30% of vehicles will be electric, maybe as high as 50, depending on what kind of hyper adoption we get. But it is going that way. They're retooling the factory floor around the world, and that's happening in real time. GM announced a new logo about 3 weeks ago. You can see it here on the far right. It's obviously an electrical plug if you look at the M. But here's the interesting thing. If you flip it on its side, it actually spells Elon. This was done intentionally. This is very creative marketing. And Mari Barra has said they're going full speed. They're investing tens of billions of dollars. Collectively, the German automotive manufacturers are spending over $100 billion to retool their factories, and you will not recognize the fleet of vehicles that they have in the next 5 years. So why do I love this as a copper investor? Everyone's already seen this. And, this is probably for new people that have never seen a commodities type presentation, but it takes 400% more copper per vehicle. Buses are more across the board. This is not 10 or 20% more copper. It's a power of magnitude for all of these things. And when you're talking about offshore wind, it takes 10 times more copper per megawatt of utility. Onshore wind, solar, across the board, and including things like lithium and nickel and cobalt. These are all going to be winners, and we call them the big five, the enablers of electrification. And I'm going to show you shortly the amount of CapEx that's going to be required if what they want to come true should be enabled. So how much substitution can take place? People always tell me, oh, plumbing, they use plastic pipes for this. Well, look at how much substitution potential there is in plumbing piping. You can see it, the tiny little dot on the bottom left of this graphic. That is not where we substitute copper. Today, 75% of all the copper that's fabricated goes into something to generate, transfer, or utilize electrical energy. So when you're talking about having very efficient things, you typically take the aluminum out and you put more copper. But if you're now integrating batteries with electrical systems, this is the integration of alternating current with direct current, which means high amperage, thick cables, and thick cables for ease of installation and for the amperage is done in copper. There is no substitute. They will both be winners, but it cannot be done simply by substituting aluminum for copper. And you have a price incentive, a 3.5 to 1 price incentive. If the aluminum price climbs with the copper price, there is not even a price incentive to substitute into aluminum. So who's the world's biggest buyer of copper? It's China State Grid. They have 1.1 billion customers, and part of China's 14th five-year plan, starting this year, spending is increasing by 50%. So if they're the largest buyer of copper, you can see here they buy 2.5 to 3 million tons of copper per year. Will China State Grid be buying more copper starting this year? Well, I haven't done the exact math, but just basic numbers and basic common sense would tell anyone if the world's biggest consumer of copper is going to spend 50% more on their business, probably that number is going to be significantly higher. And so we've seen this scramble for inventory, and now warehouses, COMEX, SHFE, LME, global stocks of copper are at multi-decade lows. We've got about 1 week of consumption in warehouses. So the question is, how much is off warrant? This should not concern you, because when we're talking about using 25 million tons a year and growing by 5 or 6%, this is really a rounding error. The speculators get involved, and I've always talked about this, and it exacerbates the real situation. People are in fact speculating in copper, and it forces the end user, the real fabricator, to trip over themselves to pay more and more. And this will continue. The scrap market is something that should be more relevant. The more expensive or more dear that copper is, the more that we will use scrap copper. But most people should recognize in the first go around, when copper prices really boomed during the China super cycle, the single biggest year was about 24%. That's how much of the total market was scrap, and the rest was in primary mined copper. We're now about 17%. Scrap will always be there, but don't think that scrap is going to be 50% of the market. That is a fantasy, because we are recycling these things. They're being replaced in almost every application. You're replacing it by something that uses more copper. You talk about a car, any type of air conditioning, a building, you name it. So we should expect that scrap might be 20 or 22% of the market, but not 50. So scrap will not save the day. So what's rule number 1 in commodity speculation? Well, running out of a commodity does not matter until it matters, and then it matters a lot. And we saw this during the China super cycle. That was a time, and if you want to go all the way till about 2019, how much money did the integrated miners of the world invest in the 5 important electric metals from the year 2005 to 2019? Aluminum, copper, nickel, cobalt, lithium. The answer is about 600 billion. So now we've done the forecasting, and Wood Mackenzie's come out with a report that said these large integrated mining companies need to invest 1,700 billion until 2035 for these 5 important electric metals. This is 6 times higher than the China super cycle. Now, do you remember the ebullience and the euphoria you saw at times during that cycle? This is going to be interesting. We continue to talk about copper, so that they're forecasting about a 23 million tons more of annual demand. And so this comes from a very reliable CAGR growth rate. This is a confusing graphic. Please do not be so. The first squares you see is if they get a Greta scenario of adoption into things that do not consume fossil fuels. The CAGR growth rate for copper would have to be over 15%. Of course, this is ridiculous. This is not going to happen. You're not going to get this kind of adoption, and you're not going to have this kind of growth rate. But you will have, for the next decade, a CAGR growth rate in copper about 5 or 6%. And by the rule of 72, the demand for this commodity doubles in about 15, 16, 17 years. And that, in my opinion, is a fantastic long-term trend to follow for any investor or speculator. If we look at the demand of copper since 1900, it grew at a bit better than 3%. So that's the long-term average. Choose your own adventure here. You have growth any way you slice it, but I don't see a scenario where we're not going to have something, because I believe we are going to have hyper adoption, and 5 or 6% should be the number that you're using. So there you end up with about 40 million tons of demand in the year 2035. Where will this copper come from? Do most people know where copper comes from? Do the guys at Dan Yergin's CERAWeek understand this? Do the people in Silicon Valley care? Not really. Oil comes from 4.5 million wells around the world, but copper is produced by very few companies, and in fact, 20 large copper mines give us 45% of supply. If they thought, the world, that we relied on Middle East oil in the 70s and 80s and 90s, wait till they realize that 40% of copper comes from Peru and Chile. These are the guys that produce copper. It's a totally different industry than it was 20 years ago. There are very few people, so you don't have to look very far. What are they doing? Where's their development? And how much can they deliver to the market at these low copper prices? Well, this is from Rio Tinto, and they say that they acknowledge they spent a fortune looking for copper. Everyone does. Every investor who ever went to PDAC would know that there was real mania phases where a lot of money was raised. But it's about the discovery. They spent a fortune. But look at the quote from Rio Tinto. But then the industry got busy being busy, spending big, but finding less. We simply didn't find any world-class copper discoveries. They already did the global adventures. They already spent the money. So now we're relying on innovation and technology, and we should be able to capture 10 or 15% more production from existing operations. But we need the engineering to bring in what they did find. The fact is, the future of copper mining is lower than 0.4% copper. There it is. Those are 19 of the largest development copper projects not owned by a major. Now, I've X'd out Pebble for now. We'll see what happens through its trials and tribulations, but certainly this will not be something that's going to produce copper in the next 3 or 4 years to change this thesis. But it's conclusive. Almost every project you're looking at has a grade of lower than 0.4% copper. So the future of copper is going to come from continue to be at higher elevations in the Andes, and that is a future growth area, in my opinion, or areas of much higher political risk. Or they must go to established mining camps like Australia, Arizona, Canada. This is the list of what you're going to get. So up until the year 2025, now you could stretch it to 2027, but that's it. This is the list. This is what's been permitted and what's being built, and it results, if it's successful and it goes seamlessly, we are going to get about 3.3 million tons from these operations. They're either new or they're expansions to existing operations. Well, look at the list. It's either Peru or Chile or areas of higher political sensitivity. Let's see what happens in the next 5 years. But that more will be incentivized only if the copper price goes higher. So it really is a good news, bad news scenario. For commodity investors, you need to look at a new rule book. It's not going to be the same. If someone allocates $1 billion to the GSCI or to a commodity index fund, before 800 million or 900 million would go into oil or gas. A little bit went into mining. That's going to change. In my opinion, you're going to have heavily skewed towards the enablers of electrification, and that's going to have an impact. But it goes further than that. From this chart that I've used for a long period of time, thank you to John Gross, who does fantastic research on these topics, and everyone who follows copper should be following John Gross, with getting his weekly comment, in my opinion. And you can see here a 20-year correlation of oil and copper. And I've been talking about the decoupling of these two commodities because they're totally different. The demand profile is different and the supply ability is totally different. And this has started to occur. We can see this very clearly now. But what I'm trying to articulate here, before I get into the copper bank square, is I believe that engineering is going to, the engineering required to make these 0.4 and 0.3% copper deposits is going to require the copper price to go in excess of $10,000 a ton. That would be a new all-time high, in my opinion. So over $4.50 a pound. You can see it here in red. Now, will oil be $150 a barrel on that day? I don't know. I mean, there's a lot of politics involved in what's going on in the oil industry, in my opinion. But it's simply, it cannot wait. It is decoupling because they are now officially, in my view, going to really follow their supply and demand fundamentals. And copper is driven by overwhelming demand and of course, very interesting supply unless we get higher copper price. So this is the period in the green circle. This is when The market cap high of the things that Copper Bank acquired was in excess of $250 million. So now that we're starting to get to that level again, I really do look at it as a scenario that if you get euphoria, our value should increase simply with a rise in copper price. When the copper price collapsed to its 15-year low, that's when we acquired our projects. Buy low, sell higher. But in this time of what should be euphoria, we look at it as time to unlock value, and it's for us a lot of good news we're going to be able to deliver to the market. So how am I going to unlock value? I got 2 development projects, and then if they are successful, I have a royalty opportunity on each of them. We're certainly not going to sell that with the projects or move it forward if we're successful in doing commerce on these projects. So there are 3 businesses or 3 areas where we can really give our shareholders appreciation outside of share price appreciation, including what we believe is some sort of catch up to where those old values were once upon a time. We've been spending a lot of time at Copper Creek in Arizona, and I firmly believe that this is the #1 jurisdiction in the world for copper mining. This is an area that was the largest producer of copper until Chile surpassed it, and it's still an area where everyone is working. Most people are working in copper mining, and everyone goes home at the end of the day. And the geology is absolutely prolific. So the 2 intersections that intersect there in Arizona, it happens directly at Copper Creek. So it's given the project over 400 hydrothermal breccias are there, and only about 10% of them have been drill tested to date. They have drilled, the previous operator, 220,000 meters on this project. That would cost $70 or $80 million. And it's been a land consolidation. We have 16 square miles that is now contiguous, and we have 2 totally different opportunities. We have the established resource, which you can see on the bottom of the screen, and then we have this area that says open, and that trends all the way to the Ray and Resolution mining complexes. We look to be doing a lot of work here this year, and as per our press release of a few weeks ago, we have boots on the ground starting at the end of this week, where we're going to be doing reviews and studies that will culminate in what should be a proposed drilling program at the Copper Creek project. We own this project 100%, no debt, and the holding costs now are $125,000 per year. So this is the area where we have a historical resource. You can see 2 outlines. One is with using a lower cutoff, and one is using a higher cutoff. And this is what these hydrothermal breccias look like. Every time you see a pink hashed area, that is an area that has one of these hydrothermal breccias. So if you had a complete wish list, one could do $50 or $60 million of drilling at Copper Creek to definitively understand what is going on on the greater areas of the project, when the resource is projected to surface areas outside of that. And if I show you a cross section, we want to focus the 2 areas where the orange boxes are. These are areas that are predominantly never been drilled, and we want to be doing some 300 to 500 meter drilling in this area. But first, we're going to do the studies. We're going to do some reinterpretation. We're going to rerun some of the ZTEM that we have already done, and we have this data. We're looking to redo the resource using different parameters, maybe looking at adding some byproducts that were never added before, and presenting all this to the market. And then we will contemplate doing a drilling program for later in the year. This is the historical resource at Copper Creek. It is historical. We do not consider this to be contemporary, but it was done to a 43101 standard by IMC in 2012. And it's important that people read this disclosure very carefully. But the numbers give us what is one of the largest copper porphyries in the world. And actually the grades are much higher than the average. So I think that's an attribute or a positive attribute for this project when you start differentiating it from the others. And if we can find more resource, particularly near surface, I think this becomes a very exciting project for the industry. Our other project is in Nevada. It's a copper oxide project that was brought through to a pre-feasibility study that was released in September of 2013. 86,000 meters of drilling, great location for this type of operation. This is not, would not be a mill, this is the leaching copper. And there's an area to the left here that has not been drill tested. This land was acquired by the previous operator in 2011, and they did a bunch of field studies in 2012, It's called the Copper Ridge Prospect, and this has 1 to 12% copper oxide outcropping at surface, and it is within 1 mile of all the drilling that's occurred on the project to date, and where the 2013 PFS was completed. This is a very exciting exploration project for the company. So for very little money, we can answer some very important unanswered questions, and any kind of success in this area affords us either an additional starter pit or maybe some higher grades or additional mine life to augment the existing 2013 study. So to duplicate all this work so far, 120 million, thereabouts. This is all, you know, they're US-based projects, so very good locations for both of them. But now, we bought these projects when the copper price was below $3. They are not economic, but we know, and according to the data from BHP, 75% of the development projects in the world are not economic at sub 350 a pound copper prices. Now that we do have 350 a pound copper, and we believe that the copper prices should continue to trend higher because of all of the statistics and data that I presented just before. So the torque, the net present value of the portfolio, every 25 cents that the copper price now goes higher, there's a lot of appreciation. So we can look at optimizing or augmenting these projects, but we can now talk about what's the value, how much money's been spent before, and how can we increase the value of the portfolio. So from a 28 million Canadian, it's a 28 million Canadian market cap, about 20 million US dollars, you could see, you start getting the 375 copper based on those historical economic studies, you know, it's over $1 billion of net present value. We will, I believe, capture some of that along the way as these copper prices continue to stay north of 350 a pound. The royalty company people can follow, but we're really trying to communicate this to the market because there's been a lot of success. And if you look at what does a 1% royalty look like at each project, what does a 2% royalty look like at each project, we have contemporary value. You've got Nova Royalty that's been a huge winner, over $300 million market cap. And what are they paying for 1% and 2% royalties? So you could be pessimistic and say, well, these projects are not development projects and they're not in production. So what are they worth today? But as we move them down, move the ball down the field and advance them, there is a whole different value that a royalty would have at Contact or Copper Creek as we do that. But we do want to brand it. And certainly we have this business which we can partner with someone else. We can be our own royalty company. We can spin this off as a share dividend for shareholders. But all I'm trying to say to the market, it's worth more than zero. There is a lot of value here. And we control it, we can segregate it, and we want to start talking about this. And you can compare that to any other company out there. If this was its own public company with a 2% royalty on each of our projects, what's that worth? Team has over 300 years of experience, and we collaborate, we work collectively, and I can say this firmly that you know, our team is 1 degree of separation from anyone who is anyone in the world of copper mining. Myself, I delivered the keynote at CESCO's famed Copper Dinner in 2017. I'm not being a braggart. I'm telling you this because I'm proud of that and I earned it. And to have that distinguished audience to talk about copper and the over 20 years that I've been studying these themes, and my opening line to the copper industry was, "You are all in the energy business," because that is the future. The increasing role that the copper mining, fabricating industry has for the world to achieve these Green New Deals. This cannot be underlined enough, and I cannot emphasize the importance that this will have. Elliott Wave, technically, by the way, they see copper at over $7.50 a pound. Now, could you imagine the champagne that will be popping in the streets of Lima and Santiago if that were ever to occur? So here we go, to summarize, Copperbank's market cap, 28 million. We believe there's a lot of value here. We've had a tremendous amount of insider buying. And with the current financing, I am the lead order, and I will be probably the largest subscriber to the financing. I'm keeping it open for a couple of weeks for those that are interested. It is for US investors that are accredited. This is not investment advice. I'm just simply saying that this went to the market, and we're going to keep it open for about a week, week and a half. If you're interested and you found compelling some of the discussions that I had today, you can contact me. I'm happy to share the subscription agreement for your review, but you must be an accredited investor. Otherwise, you can speak with your financial advisor or people that give you advice. And we welcome everyone to come and join the Copper Bank family. Very small dilution, 3 million shares right now. It'll give us the G&A for 2 full years, and we can complete all the important studies that we're doing right now. We will deliver all of this news to the market. We will continue to market the company and the results of all this news. And we also have a bunch of research coming that's going to be delivered, I believe, to a lot of generalist type investors. But net, you're going to have a company after the financing that has 81 million shares outstanding, owns 100% everything that I just talked about, and is allocating these funds to pay for all of our holding costs and G&A for 2 full years, and it pays for all the studies. We will then value, if the market rewards us for this hard work, we will then look at doing some drilling programs later in the year. But I believe that there is a lot of value that can be captured from the 28 million based at 35 cents a share. On that note, I guess we go back to Q&A if there is any.
Sure. Thank you very much.
Now you're going to stop sharing my screen, right?
No, leave a slide up.
I can't see myself. That's the only problem.
But we do. So.
Okay.
Where do you see the rest of the world, maybe the poorer world, getting on board with this? Price of green energy might cause a bit of resistance. And just building infrastructure in a place like India. Okay,
well, let's qualify that.
Different trend than what you have in Sweden. So, what the other?
Let us presume we're in the poorest village of India, or we're the poorest village of Africa. Poorest village. It's generally sunny because it's near the equator. Okay. The cheapest form of energy, electrical energy creation for that villager is solar power. The cheapest. This is no longer for debate. Now, I'm not saying this guy's going to buy an array of 50 solar panels, but for him to have 2 solar panels and a small battery to be able to have some basic comfort and lighting, that's what they're doing. Now you can multiply any small number into a big number, it becomes a big number.
Yeah.
So for the third world, I think the fact that solar has fallen 95% in price, this is something they celebrate in the streets of every village of India and Africa. This is not for argument anymore. It's simply the cheapest way for them to have access to electrical energy, not by creating a 1 gigawatt coal power plant and distributing expensive electricity throughout the country.
Yeah, but I guess let's say the grid in New Delhi.
Microgrid. This is going to be done in microgrids, which is copper intensive, and it's going to happen in hundreds of millions of applications. That's for these people. We're talking about the villager of Africa. Now, are we talking about people that live in small cities in India? That's something different. Or small cities in Africa? That's something different.
So what would you say to Delhi or Lagos or something like that?
Well, it depends on the endowment. Depends if they have access to natural gas or LNG. Are they landlocked? Do they have any kind of wind and solar potential? I don't know. There's too many power markets to talk about. But it depends on local endowment, local position. But ultimately, it's going to be done with a mix. No, there's no one silver bullet. It'll be done with a mix of things.
Okay.
And nothing comes for free, by the way. Nothing comes for free. I'm an investor. If they want to do it a different way, that's fine.
Yeah.
But that's just not where the trends are going.
Have a question or two?
Yeah, just I guess on that theme, to say like developed nation like the US, how do you think a country like the US going to approach the grid and the extra strain the existing grid in the US would have, from additional charging stations around the country?
I love this question. This is the best question, because let us assume everyone has an electric car. And let us assume they all come home at 5 o'clock and they all plug in their car. That's not what you're going to do, because electricity in almost every market around the world is extremely expensive at 5 o'clock. It becomes very cheap at midnight. So if you have an established electrical power system like Germany, which is 50% coal, we recognize that, that's changing, but it is coal, it never turns off. It runs all the time. Ask anyone in Berlin, Germany, if they've ever had a power outage. It's never happened. It's running at 125, 140%. So what do? The power generators of Germany at 11 o'clock when everyone turns the lights off and stops using electricity? They would love to sell you electrical energy for your electrical car. Okay, that's that market. Let's say you live in California, where it gets sunny at 9 o'clock and all these industries have solar panels on their roofs now, but they can't use it. It's wasted. They have, millions of cars are going to be plugged in. They're going to take this power and they're going to go home at 5 o'clock and they are going to sell power, not because they're nice people, because it's very expensive. And they're going to feed into the grid from the car. They're going to do it day in, day out. Now, they're not obligated to do it, but when they come home, that's what they're going to do. There are many companies that are integrating all this, and that's another reason why Shell has bought Ubitricity. But the amount of people that are, this is happening in real time with millions of cases right now. So it depends where you live, but the grid does not have to be, like people think, fortified or doubled or tripled or something like that. You have to create some efficiencies along the way, and we in America use many inefficient washing machines and dishwashers and refrigerators. Those are slowly becoming more efficient, but you are typically have to use a bit of common sense that people are not going to pay 3 times more for the electricity because they must have to plug in at 5 p.m. They're probably going to do it when they're sleeping, at least you hope, unless they want to pay. Then they're more than welcome to pay a lot for their electricity. But around the world, I believe that's what they're going to do.
Yeah, so there's the issue of intermittency and the loss of electricity when you're transferring it from a quiet market to a busy market. That'll all get improved.
Well, it being improved, absolutely. Again, what's different jurisdictions have different applications. So what's the most sophisticated, largest electrical market in the world? Well, it's China. They passed America 15 years ago. It's and keeps climbing. And people used to tell us, because what China is doing now is a multi-asset generation plan. Natural gas, they're doing a big conversion from coal to gas. They're also going to have wind and solar augmented by many things, including hydro and batteries and what have you. But they used to tell us that you could not move electricity 1,000 or 1,500 miles. China has a proprietary 800,000 volt DC system. They're moving electricity from point A to B, 3,500 kilometers. No one ever thought that could happen. And why am I telling you this? Mohammed bin Salman Al Saud is creating a 200 gigawatt solar scheme in Saudi Arabia. And he wants to export energy, water, congealed electricity, which is what? It's aluminum, to the world. Now, he's going to do this to Africa. This can be all through the region there, and including what they could do with the sunlight potential of North Africa. These are all game changers. So it depends where you are, and this is still evolving, but the trends are all going that way. And why do I care if it's successful or not? I don't care. I'm an investor in copper, and I know that it takes 400 and 500% more copper per application. So even if they install a wind turbine somewhere in China on a plan, and it only works 1 hour a year, I don't care. The copper sits there. There's 5 tons of copper in the unit, and it just sits there for 20 years. And they are installing them. I'm being this to be a little bit ridiculous, but these are being installed at scale, and the CAGR growth rate of all those different fields is growing way beyond anything else in global energy.
Yeah, interesting. And then one last question for me on the copper bank royalties. So you're going to sell a royalty from your 2 existing projects to the royalty.
Not selling. I didn't say that. Okay. We're not sellers. We're segregating it. We're letting it sit here, let it be valued. But if I do commerce on a project, I have the optionality to either sell a portion of it or partner with some other royalty company, because it has more value. If and when our projects go down a development arc, those royalties increase in value on a discounted cash flow model. Today, they're worth less than they are in the future, but it's not selling, it's segregating.
Gotcha. And so is there a plan to spin out that, royalty co into a separate listed co at some point?
It could be. It could be. We don't know. That's a forward-looking statement. Obviously, we think it's worth more than zero. It needs to be branded, needs to be augmented, developed. but we would like to drive control of that vehicle. So maybe we're the acquirers of additional royalties. At that point, it becomes an entity that could be spun out. But so we're just branding it to let people know this does indeed exist.
Yeah. So you would be looking at third-party royalties now for that vehicle.
We're buyers. We buy low and we aim to exit higher. So if the stronger that our share price is, the more flexibility we have to do many creative things. But when our share price was low, we didn't needlessly dilute the strategy. We, like insiders, bought millions of shares. The time to dilute your company and not get rewarded for it, I think that we have to be very proactive that way. And we think we're all owner operators. That the team is fully aligned with all of our investors. And we've been waiting for this copper market to be in the $3.50 a pound since the strategy started. This is the first time that's occurred. So as anyone understands, there is a lot of interest in copper development stories. We are no different, but then we still have to do the work. We have to go and move the ball down the field. And that's what we're doing now. The team is going to work hard, and we will deliver these results to the market. The market will digest it, and then we will make our next steps, which should culminate into a multi-phase drilling program at both projects.
Yeah, exciting. Thanks for that, Campbell.
Sure. Just one last question. Millions of people in Canada and United States regularly have to drive 300-400 miles at a time, and especially carrying loads. That's big countries, long distances. The current models and batteries, really stretch the use for people who have those kind of driving habits. How someone has to buy one vehicle, it might be a while before that person buys an electric vehicle and needs a gasoline engine for those big trips.
Well,
what kind of transition you think
we're not catering to the people of Wyoming that drive long distances, Campbell. We're catering to the people that live in Shanghai and Delhi and the big cities of the world. For them,
I get that, but
we're going to address the people of Medicine Hat and Brandon, Manitoba, and Wyoming later. However, I have driven across America and across Europe in an electric vehicle. It actually does work. The problem is they're too expensive. These cars, the ones that actually can do the 400 miles, are not what people are going to buy today. But this is changing, and you're going to see that the offering for consumers in the next 2, 3, 4 years is going to be available, and the cost will be roughly the same as if people have a choice. You're a consumer, you can probably buy a Camry that's gasoline or electric if you want, and depending where you live, you'll make your choices. But yeah, for sure, if you have to use some common sense there. That's not for someone who lives in a rural area today.
When will the batteries and the technology be there where you can be in northern Manitoba and have an electric car?
Do you know that the next generation of charging will top up a battery 80% in 10 minutes? Now the key there, you have to have a big battery. That's how that works. It charges very fast to 80% and then it slows down. So when will the battery, when will a large battery price come down? Well, they have come down. They've come down about 50%, and they're really it's like the brains of a car. We should see some sort of price parity in the next 2, 3, 4 years. There's so many people working on this, and the technology has been doubling every 3 or 4 years, 5 years collectively, I'm saying, when you factor in cost and advancement. So it's happening very fast. And even so, I think depending on how much you drive, I mean, who's driving 1,000 kilometers a day in, day out, driving a passenger vehicle? That's rare. That's a trucker or that's someone else, but not someone driving as I said before, a Toyota Camry. That might be the road trip of the year, or they do 2 a year like that. And for now, they would have to stop every 2 or 3 hours for 40 minutes. And that's not as convenient. So what you could do, perhaps, you save a lot of money in the long run. I guess if you're an Uber driver or people like that, they drive 100,000 kilometers a year, but all day by day, where they can charge their vehicle at the end of the day. And these are the guys that really use these products.
Gotcha. I want to thank everyone.
I'm a copper investor, Campbell. I'm not, I'm not here to argue about people on the last mile of this or that. The trend is underway. The demand for copper will double. Okay, you can argue, is it going to happen in 15 years or 18 years? I don't care. It's a lot. They're going to use a lot of copper to do all of these things, irrespective of the Green New Deal. This is already happening. It's underway. It's only going to be exacerbated by all these trillions of dollars they're going to throw at these things. And of course, there's going to be many white elephants, many of these things that will be laughed at later because they didn't work or they weren't fully economic, but they will do them. The capex will be there and they will consume the copper for now. And my whole thesis is that if we can see copper at $4 a pound, we have an opportunity at Copper Bank to unlock a tremendous amount of value. We can raise capital probably more accretively, and we can just look at many different scenarios. So that's what I'm looking at, not about what the electric vehicle market looks like exactly to the decimal point in 2025. That's not going to change what we do. We just need to see this continue, and it should. As an engineer, it has to. I mean, otherwise, how are you going to make this stuff possible? It will, and it should reverberate to overwhelming demand for people that make cables, transformers, windings, all these things, and they will be buying more copper, and they will pay more because the consumer is buying it. And can they absorb another 50 cents a pound or $1 a pound? Absolutely. You know, we remember in 05, 04, they were terrified, miners and fabricators, when copper went from 80 cents a pound to $2. People are going to stop using copper. They didn't. Went to $4. And it was absorbed that time into global industry. And if you look at how much copper is in a car, we're talking about 100 kilograms, right? 200 pounds. Now, if the price of copper goes up another $1 a pound, we're talking $100 here. I mean, it's a rounding error. Or the cost of installing a megawatt of wind power at $3 million a megawatt. Sure, it uses 5 tons of copper, but if the copper price went up by $1,000 or $2,000 on a multi-million-dollar project, it's nothing. It's a rounding error. It will get absorbed, and that's why when you look at the Elliott wave, $7.50 a pound, it seems a bit crazy, but the technical people see it going that way. Or if we simply, will we see copper surpass its old all-time high in the 2011 period? I think that is a very attainable goal or milestone, and it really will be. I think anytime a commodity goes through an all-time high, I don't care if it's hogs or it's logs, you end up in a mania or a euphoria phase for that commodity for a period of time. And it may not be sustainable, but it certainly will be there.
Just so this is a good question, and then we want to close. We have the demand side for copper, supply argument for copper. What about just the dollar debases, and current copper trends are steady? Could you see that pushing copper to $10?
I don't know. What's the value of a dollar 2, 5, 10 years from now? They've created a lot of them. It would make sense that everything should get revalued. You know, people talk about gold and all these other things, but you know, if you talk about Microsoft, an international business that does commerce probably in every country of the world, it just happens to be listed in US dollars and a US exchange. So if the US dollar lost a lot of its value, Microsoft has to just go up because of the loss of value. So it would make sense to me if the US dollar is devalued, everything priced in the US dollar is going to have to account for that. And that's where we saw in the 05 to 08 period, all of these commodities went higher. There was many things that were pushing them simultaneously, and one of them, perhaps the biggest one, was when the US dollar lost a lot of its value.
Okay. Thank you, everyone, for tuning in. We'll be queuing you for feedback. I would love to get some notes from everyone. And you can follow Gianni and Amvest Capital in usual social media places, and amvestcapital.com/webinars. So, Gianni, you want to wrap it up?
That's fine. If people want to take a look right now, of course, if anyone's interested in the placement and they are accredited, they can email me. Small allocations, no one big allocation for anyone, but they're more than happy to participate that way. Otherwise, just follow us in the market.
All right.
Lots of volume on the OTC and in Canada, so it's very liquid, and we should be one of the go-to 10 or 15 names in copper juniors, we think, and we welcome everyone to follow Copper Bank, because it's going to, I think, be a fun ride for the next couple of years.
Thank you very much. Good day.
Thanks.
Bye.